Welcome back to Out of the Rough. I'm Fred Arnold. I'm joined by Rhona Jukes. Rhona Jukes is a mortgage professional with American Family Funding. And Rhona, I want to talk to you today about the pre-approval process and how important the pre-approval process is, because I believe if you do it right, it makes you almost like a cash buyer in this market. And cash buyers are important in this market.
Most definitely. Not only in this market, it's essential is because an offer is really not going to be accepted without a pre-approval letter. But more importantly, you want to make sure that you're working with the realtor in the right price range, that you are comfortable in making mortgage payments each month.
And a pre-approval will allow that to happen.
A pre-approval will give you the opportunity to look at all the numbers and determine what your monthly payment would be and allow you to go look within that price range.
Let's talk about the differences and break it down a little bit more on a pre-approval versus getting pre-qualified.
Oh, you know what? A pre-qual is you'll call up on the phone, you'll provide them with information regarding your income, your assets, and based on the information provided, the mortgage professional would be able to work up some numbers and talk to you about interest rates.
Give you a ballpark.
Very ballpark, very basic. A pre-approval, though, takes it one step further. We get supporting documentation with respect to your income and your assets for your down payment. We run a credit report because FICO score is probably the most critical part of the pre-approval process. And then from there, we run it through the underwriting systems and we take it one step further because personally speaking, I want to make sure that if I'm giving a pre-approval letter to a client, I want to make sure I'm going to be able to follow through and perform on the back end.
And fund that loan.
Right.
So a pre-approval is a thorough analysis. You run a credit for the consumer, and what documentation do you check of the customer to make sure, or the borrower, to make sure they are qualified? Well,
the documentation that we request is if they are a W-2 salaried employee, then we want to see current pay stubs for at least the last 30 days.
So pay stubs for 30 days?
Pay stubs for 30 days. We'd like to see their W-2 from last year. And even in today's world, on a salaried, we have to see the last 2 years of tax returns.
Yes.
Especially in a self-employed borrower, because they want to see how is his income, what's his adjusted gross. If we can add back, we do that. But more importantly, too, is we want to make sure that there's not a decline in income because the lenders tend not to
they don't like that as much. Yeah.
No,
they scrutinize self-employed borrowers more as far as the income goes. But if the income's there, they don't mind that.
No,
but they really scrutinize the actual income because with self-employed borrowers, there's such fluctuations from year to year. Because let's face it, entrepreneurs do what they have to do to make their business run as efficiently as possible.
That's very true.
You know, and I'm a firm believer in the entrepreneur, and I love the entrepreneur that's out there creating jobs, but at the same time, it's scrutinized pretty big.
Yeah, they're very tight with that. Even with the bank statements today, the lenders want to know about large deposits.
Yes.
They want to make sure that that isn't borrowed money, and we need to trace it. So, please work with your mortgage professionals when they come back and ask you for one more documentation or something else, because it's the lenders that are requiring it. Personally,
one more document.
One more document.
Yes, and one more document.
That's where your mortgage professional comes in, because that person should know exactly what that lender is going to need and have hindsight and be prepared, because the more complete package that's submitted to the lender, the quicker you're going to hear about your loan is approved, and the quicker you move forward into the funding of your loan and acquiring that home.
That's great advice. Now let's take a step back. You wanted tax returns and W-2s on almost all borrowers and a pay stub. What else do you need?
We also need to document your cash down if it's a purchase transaction, or just to see your reserve money in the case of a refinance. So we want at least 60 days of your bank statements for your checking and savings, and 30 days on any retirement or investment accounts.
So you want to go back and at least look at those items. Right. Credit. You're going to pull somebody's credit report. I think that's really important, because there might be some things on people's credit report they know nothing about.
Most definitely.
And it doesn't necessarily hurt them unless they don't deal with it. a good example is a $99 collection for a medical that they know nothing about because for some reason the insurance company didn't pay the bill.
Exactly, but either on the other side of it, they may not be aware of what affects their FICO score.
What affects their credit FICO score?
Right, and how even merely being higher than 50% on your credit line could cause your credit score to change.
So let's take a step back on that. I think that's important. So your balance is X, let's say it's 10,000, available balance.
Right.
But you actually owe 6,000, that's 60% of your credit card.
Right, it will start eating away at your FICO score.
It'll lower your score.
Yes, it will lower your score. So optimally, you want to be at 30%. 50% is okay. Once you start going over 50%, it just starts eating away and lowering your score. So this is another way that you can be, it can be brought to your attention on how even to improve your credit score.
Yes, and that's the consulting that you mortgage professionals do. Give you some guidance on your credit report and your credit scores. Now, the pre-approval goes through an underwriting engine that you talked about, and a computer system that says, yes, we like this credit risk.
Right.
But it still needs to be approved by an individual, doesn't it?
Yes, most definitely. This is just what it says, pre-approval. It's just getting the file ready, knowing that if we were to move forward based on the information we gave the system, that reasonably said it would be approved. But it still has to go under the eyes of an underwriter at the lender level and updated information.
One thing a good mortgage professional can do is they can tell a story about the borrower. You know, if there's gaps of employment or if there was an illness in the past, or tell us about writing a story, because sometimes a story needs to be told if there's gaps of employment or someone went back to school to get an MBA.
Exactly, and you get to know your client just by sitting down and talking with them. It's amazing when you start a loan application how the stories just come alive and their life becomes your life and they want to share it with you. So there are times where we have to write what we call a letter of explanation, and it's basically an outline to the underwriter of that file. Why a document may look the way it does, why there may have been a large deposit made, where did that money come from. So it's just an overview of that file so that when the underwriter looks at it, we've pretty much recapped it for her.
Yes, because an underwriter might only have so much time to underwrite that file, and maybe they were just reviewing a loan that was funded 3 years ago from someone in that profession, and it's a foreclosure and it becomes challenges. So it's important we tell a story to that and put a face to the name, because that underwriter is in their own kind of world, if you will, hoping that you explain why they should put their name to this loan.
You know, I used to be an underwriter many years ago, and that was helpful when my loan officers gave me the file with a recap, because you're right. You're sitting there and you have an obligation to underwrite so many files in a day, and it gets overwhelming, and it's no different than picking up the phone and it was a bad call. The next call coming in doesn't mean that they should have the same response.
So you need to be prepared, absolutely. Rhona, how do those that are watching this get a hold of you?
Well, they can reach me at Rhona at AFFloans.com, or my direct number at work is 661-505-4335.
4335. And that's Rhona at AFFloans.com. Thank you very much, Rhona Jukes.
Thank you for having me. It was a pleasure.
Ladies and gentlemen, Rhona Jukes, American Family Funding. We're going to jump to a quick break, but when we come back, I want to talk to you on why now is the perfect opportunity to buy that home of your dreams or buy an investment property.